And now to the second issue, the Federal Reserve. The central bank did what many expected it to do. It held interest rates steady, but there were subtle hints that a rate hike may be coming next month. Steve Liesman reports for us tonight from Washington.
The Federal Reserve snapped the rate hike ball at its November meeting and proceeded to punt all the way down the field to the December meeting. That's to say it declined to hike rates in November, choosing to do an end run and steer clear of having any influence on the election. But as expected, it did drop a subtle hint that the rate hike is coming. In its statement today, it said the committee judges that the case for an increase in the federal funds rate has continued to strengthen, but decided for the time being to wait for some further evidence of continued progress towards its objectives. It used almost the same language as September, but it inserted this word some, giving a sense that perhaps the bar is not very high for that December hike. The chance of a Fed rate hike now stands at 69%, up a few points for the December contract, and higher from the November contract, which traded a very small chance of a rate hike. The Fed also noted a bit more inflation, saying in a statement that inflation increased somewhat and removing a line that said inflation is expected to remain low. It otherwise had a similar take on the economy as in September, saying the job market was solid and the economy had picked up from a modest pace of growth. The vote 8-2 with dissents from Loretta Mester from Cleveland and Esther George from Kansas City. Eric Rosengren from Boston, who had dissented at the last meeting, got behind the majority this time to keep rates unchanged. For Nightly Business Report, I'm Steve Liesman in Washington.